So, who likes Lego? Because basically this company is modeled on or close to what Lego does, okay? So for those of you who as children played with Lego, this is going to be a joy of a case. For those of you who didn't, well, it's still going to be a joy of a case. We're going to do as much as we can to make it bearable, or and even to make it quite enjoyable. Okay, so very interesting case, and the company in question, fictional business by the name of Prybloxx. Okay, and what we're going to do over this series of classes is run through the entire pre-scene. So in sessions 1, that's today, and 3, which takes place on Monday, we will cover the entirety of this document in detail. I'll be picking it apart and talking about the most relevant E2, F2 and P2 theories that relate to this case. I'll be also talking about likely exam issues, and I'll be discussing the implications of everything that's included in this document. So I've analysed about 45 pre-scenes over the years, so I understand what constitutes at this stage solid pre-scene analysis. So let's get right into it, starting with this first introductory page. So we're told that Prybloxx is a publicly listed company, quoted company, that manufactures a range of plastic bricks that are sold globally as toys and educational products. Prybloxx, we're told, is based in Central City in Veranda. So we've got a fictional business, Prybloxx, based in a real industry, and it's located in a fictional city in a fictional country. So Central City and Veranda. We're told that Veranda is a developed economy where the wages are high, and that means citizens afford a good standard of living. Okay, let's stop there for a moment and unpack some of these terms. So first of all, Prybloxx being a quoted company, and that's important for a number of reasons. First of all, corporate governance is going to be an important consideration for this business. So publicly listed companies are held to a higher standard than private companies. They're expected to adhere to the practices of good corporate governance. So call to mind the corporate governance issues that you would have come across in maybe E2 or E1. And it's going to be important that there's a good mix of skills and backgrounds on the board of directors, that you've got a balance between the executive and non-executive directors, for example. There should be separation of the chairman or chairperson and CEO roles. So they're the kind of things we'll be looking out for as the hallmarks of good corporate governance. Secondly, there are areas from F2 that are going to be particularly relevant for a quoted business. First of all, we have IAS 33, which relates to earnings per share. So the share price is going to be a key metric for a quoted company and carefully observed by investors in this business. And IFRS 8, which relates to operating segments. Public companies are required to divulge their most important financial results, so profitability, certain assets, etc., to the investing community in their published financial statements as they relate to different operational segments. So that could be by a geographical split. So for a company that is globally, has global presence, they would present their results, for Europe, for Western Europe, for Eastern Europe, for Asia, etc. And investors would expect to see that. They would also expect to see perhaps a split of results by product category. So if there were very distinct product categories that the company was selling, they would be expected in the financial statements also to divulge that information with a split by product category. Okay, important to keep those two standards from F2 in mind. Now, of course, as a quoted business, there are certain advantages that come with that. And probably the most important advantage is that they actually have access to more financing should they need to make a big investment or make an acquisition or something like that. So with a private company, they really are confined in the way that they can access financing, long-term financing. They're stuck with long-term debt and things like that. But with Prybloxx, they can draw on that long-term debt, but they can also sell shares to the investing community, so they can access finance via public markets as well. That's the big advantage really of being a quoted company. On the other hand, as a quoted business, certainly there are some cons, and the biggest ones really would be that you're subject to more scrutiny from investors, from the public at large, so you attract a lot of attention. You obviously have regulatory obligations. You need to publish your financial statements, you need to audit them, etc., every 3 months or so. So obviously that creates expense and creates complexity for you. It's important to watch the share price, okay? We need to keep an eye on that, a key financial metric, and it reflects the confidence in the business from the investing community, okay? Also the fact that this is a global business, again, touching on a particular accounting standard from F2, IAS 21, exchange rates. This business, do they employ hedging strategies, for example, when it comes to cross-border transactions? Because fluctuating exchange rates could adversely affect their business and hurt their profitability. We'll see that their currency, again a fictional currency, the V dollar, we don't know much about the V dollar. We don't know if it's on a one-to-one basis with the US dollar or the euro or something like that. That's pure speculation. We don't know. But we do know that different currencies, they fluctuate all the time in terms of other currencies. And it's important to manage that volatility in some way. So that's a risk that the company should be managing. So developed economy with high wage rates, and the citizens, they enjoy a good standard of living. So definitely there's a negative there in that it drives higher salary costs for Prybloxx. So that is the negative. But the positive is they've got a public that has got spending power. Okay, so they can charge basically higher prices to the public in their home territory. Of course, though, this is a global company, so they're exposed to many, many countries. We don't know how big Veranda is. If Veranda is a country with 1 million people, then it's not really going to have a huge impact on their bottom line if they can charge premium prices in Veranda compared to other countries. But if it's a country with 300 million, that's different altogether, and it would likely have a big impact on their profitability that they are able to charge premium prices in Veranda. Unfortunately, it's not really divulged in this pre-scene how big Veranda actually is, so we're just speculating at the moment. So, unsurprisingly, the company is expected to report their financial statements in accordance with IFRS rules. That should be no surprise to us. You are a financial manager at Prybloxx's head office, okay? Your primary responsibilities are associated with management accounting. You report directly to Alex McDonald. He's a senior financial manager, and he in turn reports to the finance director, the financial manager. Good news, folks, you're moving up in the world. For those of you who have come through the operational case study, congratulations, you've made it to the next level. You're no longer a lowly finance officer. You are a manager, so you have a certain amount of responsibility. You're no longer involved in the day-to-day execution of tasks, okay? You are taking a longer-term focus. So we can probably classify your focus for this pre-scene as being medium-term in nature. So that's kind of a 1 to 3 year time horizon. So you're going to be making recommendations on the kind of investments that the company would make in certain products, the launch of new products. Is it right for the business? Does it fit with our strategy? What kind of pricing strategy should we employ in this market or that market? And of course, because you're dealing with, bigger potential investments that play out over a long time period, you're going to be talking about putting longer term financing in place. Okay. So as I said, you're moving away from a very short term day-to-day focus to a longer term focus. So you're monitoring the implementation of strategy really, whereas with the finance officer's role at the operational case study level, you are executing strategy on a day-to-day basis. The people higher up are the ones who decide on the strategy, the directors, the CEO, the board of directors. And what you're doing is you're kind of between those people and the people on the ground working on a day-to-day basis, and you're monitoring what they do. So you're taking that strategy from the higher ups and you're overseeing its implementation, okay? You're going to have to deal with risk playing out over the longer term and risk management strategies. Of course, now we're dealing with group financial statements, and this is a company with a group financial statement setup that we'll see when we get to the financial analysis in the second pre-scene part of the pre-scene analysis on Monday. You're going to be influencing top management, so you're no longer just dealing with people at your own level, and you're going to probably be dealing with people from other teams, so not so much finance focused. You're going to be dealing with people from HR, from marketing, etc. And you need to keep that in mind. Keep in mind on the day of the exam, who am I talking to now? Okay? Am I dealing with a HR person? In which case, if I am talking about, a net present value type analysis for certain projects, you're analyzing 2 projects in terms of their net present value, etc. You're going to need to unpack some of the terminology for a HR person in a way that you would not need to do for a finance person. So with a finance person, you can kind of assume that they have certain financial knowledge. That's a safe assumption. But if you're dealing with a marketing person or a HR person, keep in mind, they're not finance experts. So play the part, okay? Put yourself in the role of a finance manager in Prybloxx, okay? And consider the wider environment. That's important. It's no longer about just keeping your head down and making recommendations that make perfect business sense for your business. Of course, it's still about that, but you need to get your head up and consider the wider context within which your business is operating. That means you need to consider the industry, okay? You don't need to be an industry expert, as my co-founder Hugo Newman will explain tomorrow in the industry analysis. You do need to understand some of the trends that are playing out in the real life industry, some of the real life industry players and what they're getting up to, etc. Some trends in terms of which geographical regions are doing better or worse and what's the expectation in the coming years. That's enough. And that will inform any recommendations you make on the day of the exam. Okay, you can be sure that CIMA is well aware of what's going on in the real life industry, and the questions that they're writing are likely to make perfect sense in the context of the industry. So if you understand the industry pretty well, it's going to give you a big advantage. The other part of understanding the wider context within which you operate, is considering competitors, considering employees, considering investors, considering different stakeholders in the terminology of, Mendelow's matrix, which you would have come across in E2. So very, very important that you consider all of those stakeholders and also the community in which you're operating. So central city, how is it impacted potentially by your business? If you decide to take your factory elsewhere and you're leaving, central city is going to have a massive impact on that community with loss of jobs, etc. Could be a potential banana skin in terms of negative public relations. So all of that's important. You need to take that wide scope vision for this particular pre-scene. And I just want to talk about, before we move on, some particularly important issues from P2 and E2 that I want you to just flag up early on. I want to flag them up early on for you, and I want you to keep them in mind as we work through this case. And I'll flag them up as they come up in each of the different pages of the pre-scene. But just let's raise these points now early on. So P2, always important. Activity-based costing, activity-based management, customer profitability analysis. Okay, so cost models. So we're moving away from more traditional forms of absorption costing. We need to consider more complex costing systems like activity-based costing and whether it would be good for Prybloxx. Quality issues, very, very important, and will be for this company. So this company, we'll see shortly, has built a reputation for quality, and they need to persist and hold on to that reputation for quality. So Philosophies like total quality management, cost of quality reports to avoid faulty goods reaching the end consumer. All of that is going to be important. There's mention of responsibility centers in this pre-scene, so that's going to be important as well. Considering not just pure financial performance metrics, which of course are very important, but understanding the importance also of non-financial performance measures. So drawing on things like the balanced scorecard to give you a wider view of performance in the business. Transfer pricing issues might be important for this business, with its cross-border transactions, with different distribution centers, etc., and presence throughout the globe. That could be a potential issue on the day of the exam. Value analysis, value engineering, target costing, to secure the desired profits that the company wants to hit. And dealing with risk, dealing with uncertainty, and using different models to deal with risk and uncertainty. So expected value, standard deviation, sensitivity analysis, etc. All of that is very, very important. So just bear all of that in mind. E2 then, Porter's generic strategies I'll be touching on throughout the pre-scene. So whether they're going to be a cost leader, whether they're going to be more differentiated and more of a premium player. Project management, the design team interacts quite frequently, the production team, and they come up with new designs all the time. So it's going to be important that they're managing projects in an efficient way. Digital disruption, which is a new theme in E2 with the 2019 syllabus, and moving with the times, not getting left behind, and making sure that customers are well served, and the customers that have become used to all things digital, that is borne in mind as well by Prybloxx. Management performance and managing conflicts between different departments and different responsibility centers will be important, and the overall ecosystem, which we'll talk about very soon. Okay, so I'm just raising lots and lots of issues early on. As I said early on, the point of these first 3 webinar sessions is to expose you to lots and lots of ideas. You're likely to be a little bit, it's normal to be a little bit intimidated early on. Think, there's just too much to cover. How can I cover all of this? Don't worry, okay? It's very early days. You're making an early start. And as I said, the idea is we expose you to lots of ideas. In the later sessions, then, we narrow our focus entirely and just start to talk repeatedly about the most important issues, and you'll see us repeat ourselves in those later sessions. That's intentional as we narrow our focus on the most important points. Let's move on then with a discussion of the history of plastic construction toys. And looking at that picture, kind of look familiar, don't they? I swear I've seen these toys before, okay? You can almost see the imprint there on the studs for those toys. I think it says Lego, okay? Surprise, surprise. Prybloxx, we're told, manufactures construction toy sets that are based on plastic bricks. So plastic bricks is the most of what goes into their products. But there are other elements as well that we'll talk about, additional features. But the plastic bricks, they are the building blocks, of course, of this toy. These bricks, they come in different shapes, designs, colors. They all have studs, or the majority of them have studs on the top, these little stick-out features, and they have tubes on the inside so that you can slot different pieces in under other pieces. So you can clip the bricks together, create toys and models that are strong enough to be played with, and then you can unclip them and make something else later on. So we're all fairly familiar with what Lego actually is, and that's the real world example, of course. That's the real world company that you need to be familiar with, and in the industry analysis we'll be talking a lot about Lego. Early on, I want to raise a point about all things environmental, and of course businesses are increasingly focused on being good corporate citizens from an environmental perspective. The mention of plastic early on sets alarm bells ringing. Plastic's getting a very, very bad rap. Of course, it sticks around for a long, long time, for many hundreds of years. In fact, it doesn't degrade So it's very, very bad for the environment in general. So that's just an early concern, really. What is being done by Prybloxx to ensure that they're an environmentally friendly company. Also, the only mention so far is that this business is a manufacturer. So no mention of selling. They're not manufacturing and selling. They're manufacturing. The selling, the retailing, is done by third parties. And I wonder whether Prybloxx could actually be doing more selling itself through its website, etc. Maybe they could establish Prybloxx and proprietary stores, and they could work quite well. But for the moment, they're relying on third-party retailers. So let's move on. So this industry really got going in the 1930s. So we're talking about an industry that's almost 100 years old, 90 years old. So this construction toy launched in the 1930s by a competing brand. This competing brand is still the market leader. Now, there's no mention of the name of this market leader, but we know who it is. It's Lego, okay? The market leader is Lego. And the design proved popular with children because it permitted them to use their imagination and play. People were attracted, or rather parents were attracted, by the educational value of the toys. And as a result of all of this, the company grew very steadily and became one of the world's largest toy makers. Okay, so here we have the market leader. They have been around for 90 years. This is Lego. And they've huge brand power. And we're going to see throughout this case that really what differentiates one company from another and what gives it the ability to price more highly than competitors is the brand reputation. Because, look at the product itself. We're going to see that this product is largely undifferentiated from one competitor to the other. The bricks, the building blocks that go into this toy, they're pretty much the same and they can be used interchangeably. So very, very little to differentiate one product from another. So the fact that Lego here can enact premium pricing and some of the rivals are cost leaders, while the product themselves are largely the same, it means that Lego has obviously got a big head start in terms of its brand reputation. It's the market leader. And it's kind of paved the way for everyone else because we see that it took other companies a long time to follow into the market. We're told in the next paragraph that competing brands only started up 30 years later in the 1960s, and our company only got going about 15 or so years ago. Actually fewer. We'll have a look at that in a couple of pages' time, but very, very recent arrival. So, Lego has paved the way most certainly. So thinking of E2 and ecosystems, it's the market leader. It's paved the way for the rest. It innovates, it takes risks, and the others follow in then. Okay? And very, very important, the role of parents here. So parents obviously are not really the end customer. They're not the ones using Lego bricks and the like. It's the kids that are using them. But of course, it's the parents that are paying up. So that needs to be kept in mind for all of the marketing materials that a company like Lego or Prybloxx puts together. They're targeting the parent as much as the child, okay? And parents are all about educational value, while for the child, it's all about play. For the parents, it's all about the educational characteristics, okay? And this company and companies like Lego and Prybloxx, they're doing both at the same time. They're educational, but they're also fun to use. And that's a rare combination. It's a neat trick that they've pulled off. Okay, so competing brands came in the 1960s, 30 years later, deliberately designed so that they were compatible with the industry leaders, so you could take the bricks from rival companies and use them with Lego. And the design of the bricks, we're told, could not be patented. So that was obviously a problem for Lego. So there was nothing to prevent competitors from just copying the bricks, provided they did not abuse registered trademarks such as company names, names of products, product ranges, etc. So we're touching on intangible assets, IAS 38 from F2. So there's a degree of protection certainly, but it's not that high. Okay, it would be different if the bricks were patented. It would mean that Lego had the market completely locked down. That is not the case, but they do have a certain amount of protection. They can trademark names for some of the kits they put together. But overall, you would have to say, in accordance with Porter's 5 forces, that this industry demonstrates quite low barriers to entry. You know, if anyone could come along and just copy the bricks being made by the market leader and achieve a product that is more or less the same, then you would say that the barriers to entry are not that high. And the way that competitors fought for market share earlier on was to compete purely on the basis of price, okay? So that's how they differentiated themselves. They made their bricks compatible with the leader and they competed directly on price, okay? So there's nothing distinctive about their offer in the early days. One brick is the same as the Lego brick. And, you know, Lego has built up a brand over the first 30 years. They've got a clear lead there. So the only way to compete really is with a much lower price. When the product is much the same, one of the big ways to differentiate is through price. But as you evolve as a company, hopefully you move to higher price points and you compete in something different. So you build your own brand reputation. And in the 1970s, or rather until the 1970s, the competitors of Lego were selling generic sets of building blocks. So they all looked like this. Nothing special, just these little component parts, different colors, different. Some of them are designed in a different way, but nothing special. They're pretty generic. And over time, the range of parts expanded slightly, to include items such as wheels that clipped into the bricks, etc. So they're going a little bit beyond the basics here. They're starting to differentiate themselves in terms of the product, okay? So they're starting to move a little bit with the times here. They're starting to get a little bit bolder in the way that they're competing. So it's crucial that firms in this industry move with the times and take advantage of trends, and they're aware of consumer wants and needs, and that they're giving the consumer more over time. And it looks like they're doing that. The next phase then, in the late 1980s, we see a new development. The leading brands manufacturer, i.e. Lego, decided to change direction by adding model kits for sale, okay, alongside these generic bricks. So the model kits came with instructions. So let's have a role for the imagination, perhaps, but some people crave this. They want to colour inside the lines. They want instructions, and there are specific bricks that enabled children to build specific items. For example, a kit might be based on building a fire engine, okay? So you'd have custom parts included there. You'd have signs and logos that come like the one there to the left. So pretty easy, you know, to produce those. You just put a sticker on your regular red block and you have something that is more customized and something that is a little bit more distinctive. So we see this transition towards something more distinct, more personalized, more customizable. So the market innovator here, Lego, again, leading the way, and others are following. So, Lego is showing here that they're continually developing the product and adapting to customer needs and trends over time. And the next phase then, over time, we're told the sophistication of these model kits has grown. So there are more custom parts, and the parts are becoming more realistic. You've little model men and women here based on characters, etc., that are enhancing the play value for children. And this justifies higher prices, okay? And we're going to see soon that actually adding more custom parts like this doesn't add a huge amount more of expense. So it's adding a little bit more expense, but it's adding a lot more in terms of profit. So there's a perceived enhanced value on the part of the customer, and that is allowing them, companies like Lego, to charge premium prices. Also, interestingly, there's been a move towards all things technological. Okay, it's now possible to purchase electronic components that add functions ranging from flashing lights through to remote control motors that can be operated with smartphone. So very much moving with times, 21st century move towards all things internet connected. So we're moving into the Internet of Things, smartphones, smart watches, etc. So customer needs clearly evolving, Lego and companies like it moving with the times. So what's coming next? What might be next up for companies like Lego and Prybloxx? Well, some ideas. Customization, first of all. So contextualized interactions. This is a point from E2. And you might not remember what that actually means, but it's just a fancy way of saying that the customer's receiving recommendations based on what they like. And the company that's most stand out probably for doing this is Netflix. So you watch a certain show, and based on your viewing history, Netflix is sending you emails, and indeed within the Netflix application itself, it's recommending certain shows based on your viewing history. So very personalized. They understand through the use of data what the customer actually is likely to want. And again, Lego will be building up a very clear picture of what consumers like, and they should be making recommendations based on what people have previously bought, and that plays into this area of customization, contextualized actions. So you understand the context within which your different consumers are embedded, and you're able to make recommendations based on where they're coming from. Co-creation is a very interesting area. So you would have online voting systems. So Lego or Prybloxx might run a poll online, with a number of different product options that they're thinking of, and they'll get, a vote from their fans on social media to ask them which one they'd like to see, and that reduces the risk basically of going to market with new products, because they have a good idea of what people would be likely to pay for. And just greater electronic capabilities in general. Working in more electronic components, making them more complex, and we're seeing that all the time. So E2 and P2, types of value being mentioned. So we've already touched upon this a little bit, but I want to come back to it again. So we've got two kinds of value here being offered by the same product. We've got play value, that's important to the child. And we've got educational value. That's important to parents. So as I said before, that's a neat trick. Very, very hard sell to get a child to use something that has educational value. Instantly they're going to be suspicious and think this is boring. It's going to be a hard sell. On the flip side, with parents, for anything that has play value, they're going to be suspicious of it. They're going to think this is a waste of time. My child should be doing something more productive with their time and learning. And Lego and Prybloxx have hit gold here. They've got something that both parents and children can agree on. One of the few things they can agree on. This is fun and this is good for me. I'm learning something. So very, very important that all marketing and design decisions bear these two types of value in mind, and that you're targeting parents as well as children. Very, very important, because they're the ones who actually pay for these products. Okay, now we come to our business. We've had a little bit of the industry background. So Prybloxx, 16 years old. So I mentioned it was 15 years old. It's 16 years old. So very, very new arrival. And it's achieved a lot in a very short space of time. When you think that Lego, the market leader, had a 74-year head start on Prybloxx, and we'll see later, Prybloxx is actually the second largest manufacturer of construction toys in the world, just behind the leading brand, Lego. That is a remarkable progression in 16 years, so very well done. Brendan Lee was an entrepreneur, obviously very skilled, who wished to imitate the continuing success of the leading brand's sales of sets and model kits. So started in 2004. And he developed, surprise, surprise, a generic type of brick that was compatible with the Lego brand. Low barriers to entry, again being highlighted. He just came along, didn't do anything innovative, just did the same as everyone else that was following Lego, and followed Lego, okay? Generic bricks, made them compatible with Lego, so that that any user who was on the fence about purchasing the Prybloxx bricks could kind of think, oh, well, I'll give them a go and, I can use them with my Lego bricks, so that's great. It would be a harder sell, perhaps, if you could only use the Prybloxx bricks with Prybloxx bricks. It would be a harder sell. So just imitating the market leader, generic bricks, built a reputation for value for money. So again, the importance of price there, keeping the price low in the early days, just copying the leader. And interestingly, they also put an emphasis on quality. So Prybloxx bricks were manufactured to very fine tolerances, so they fit together well. And the problem with other brands is they actually had a reputation for being difficult to attach to one another, and they could be quite fragile. So what Prybloxx has done very intelligently is to match the leader in terms of quality. So they're taking their time, they're probably taking on more expense in terms of the production process, etc., to get things right. Quality is vital. They're at least matching the market leader, whereas the other rivals of the market leader paying much less attention to quality. They're probably making profits in the short term, but over the long term, their reputation would likely be hurt by that poor quality. So Prybloxx has actually taken the effort to do something to make a product that is actually high quality. So in the early days of Prybloxx, certainly you would say they were adhering to a cost leadership position. Imitation, not doing anything new, producing something that is undifferentiated and competing on price. But as time has passed, they're clearly moving into a higher quadrant in terms of the generic strategies, and there's an emphasis on quality. So P2, quality management, very, very important for Prybloxx. They need to ensure that they maintain their reputation for product quality. So once Prybloxx was established as a brand that was synonymous with value for money and good quality, it branched out. It started to differentiate its product. It offered its own range of model kits in the same way that Lego is doing. So fire truck model kits, etc. So very successful with this. And as a result, it grew rapidly. And in 2010, just 6 years after it was founded, the company was quoted on the Verandan Stock Exchange. Brendan Lee, he retired, sold all of his equity. Good for Brendan. Off he rode into the sunset with his millions to live the good life, and he has no role to play anymore. So he's no longer on the scene. This is a publicly listed entity. Okay, so obviously big advantages in terms of securing sources of finance. They can draw on equity and debt finance. They have access to, they can sell shares anytime they want. That will obviously have an impact on the weighted average cost of capital for the business. So now they're the second largest manufacturer of construction toys behind Lego. The third largest company is called Constro. Very similar business model to Prybloxx. Surprise, surprise, all of these companies are doing something similar. Compatible bricks with the leading brand. So they're all kind of doing the same. And in this ecosystem, each company has a product that is compatible with the other company. So very, very difficult to differentiate what you have as a business in this industry, with the base product being so similar across the industry. So you've got to differentiate yourself in different ways. Definitely the move into model kits and character kits is a great way to start doing that. We'll see Constro's doing something interesting by targeting certain niche audiences like engineers with more complex kits that we'll talk about later on. So anything you can do to differentiate the product will be welcome. But for the most part, we're talking about a pretty undifferentiated product. Quality is going to play its role, definitely. Pricing is going to be crucial as well in establishing a presence and gaining market share for new companies in particular. But the idea is, as a company becomes established in the same way as Prybloxx, that they move away from competing purely on price, that they gain a reputation for quality, and they start to differentiate the product itself with distinctive model kits and the like. So let's see how the big three have done in terms of their revenues over the last 16 or so years since our company Prybloxx got started. So we can see the leader there still well ahead in terms of revenues. Obviously, it had a big head start. It's demonstrated very impressive growth until about 2017. And it had pretty major decline then between 2017 and 2018. So what happened there? Was there some kind of event that impacted negatively on the reputation of the business? Were there supply chain issues? Was there some kind of product failure and quality issue? Or were they launching certain model and character kits that just did not have the demand they projected? So there was a demand forecasting issue. They got things wrong in that respect. We don't really know. And as for the two rival brands, and we've got our brand there in the orange dotted line there, Prybloxx, really demonstrating very good growth since about, especially since 2010 or so. You can see that kind of runaway growth since they listed on the stock exchange. So clearly that has been a very big positive for them, but started to taper off here from about 2018 onwards. So we also see that with Constro, again demonstrating good growth but tapering off. So both of these brands plateauing a bit. Are they struggling to keep up with customer trends and the new demands as customers become more digitally savvy? Maybe they're being attracted by other goods, substitute goods, video games, etc., that can often as well come along and make an argument for their educational merits, although it's a bit of a harder sell to parents. It could be something like that. Again, we're just speculating at this early stage, but what I will say is that we do need to be a little bit concerned with this leveling off. So since 2018 through to 2019, let's see if it continues into 2020. If that growth, if that revenue growth is flat, then it's obviously going to be a problem. The shareholders are going to start getting a little bit anxious because this could be quite correlated with the share price. If they start to see revenues flatten, it's likely there will be less demand for shares. It's likely that the share price will start to fall, and then the company has a harder time tapping into equity financing if they need to raise money for a big investment or something like that. Okay.